When you look at those charts that Kevin Green is showing us, when we see Nvidia, and I know you're doing a cash secured put on this that expires on the 20th of September, but long term, you said you do like Nvidia for the long term, right? Don't trade it. It seems like one you believe in.
Absolutely. We deploy a cash secured put to add to a longer term portfolio. It obligates you to buy the stock if it moves adversely. And actually, by deploying this type of strategy with the strike selection and premium that I'm receiving, my break even is actually $90 per share. So that's where that cushion comes in. So, meaning, if it does move adversely, I'm okay buying 100 shares at $90 per share, and I'll continue to deploy strategies to reduce my cost basis. But yes, AI is here to stay. We're definitely in the early innings of that. There's volatility and uncertainty ahead. We're even challenging places within the market right now, but post-election, there tends to always be a rally nonetheless. So longer term, absolutely with NVIDIA. Thank you for that clarification.
In a week where the stock market felt like a chaotic thrill ride, one name prominently stood out: Nvidia. Recently, Nvidia's shares took a dive by more than 6%, concentrating the gaze of investors worldwide. Caused by an unexpected mix of global disruptions and company-specific news, this sharp decline held the industry's breath. However, not all hope was lost. Lately witnessed an equally vigorous rebound before falling back once again. At the center of this spectacle were both sobering speculation about future AI platforms and tumultuous global financial moves. So how did this happen? What's the catalyst behind this improvement? And what should Nvidia stock investors be expecting in the upcoming period? That's what we will break down in today's video. So don't miss out. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Starting with Nvidia, those shares are down nearly 6% as investors continue to worry over the return on investment for AI spending. The stock is about 30% off its highs. Here with our trade, CNBC contributor Boris Schlossberg. He's the managing director of FX strategy at BK Asset Management. Boris, so if clients pull back on the need for a big investment in AI, it could hurt Nvidia. I don't know what the deal is with Blackwell chips and so on and so forth. With the price action alone is making us all take notice. What do you do with the stock here?
Well, I think for all of us who've survived dot-com era, it's like a PTSD. Is this another Cisco? I don't think so, however. I think AI is still a huge opportunity. And of course, NVIDIA stands to benefit from it the most. Yeah, the Blackwell chips are actually still remaining high demand, and they're going to start shipping them in third quarter. So I think given all the turmoil they've had and the correction they've already had from the highs, it's probably one of the more interesting opportunities right now is to, given the volatility, is to actually sell puts against it and let it come to you. I mean, I'll give you an example. Just the put that is expiring this week, 87s, will give you $1, and you can buy the stock $13% below its current price. So if I was going to put a position into NVIDIA right now, I'd just be selling puts and trying to let the stock come to me, because long term, I think it's still going to be a very, very good play.
Nvidia's recent market shuffle isn't a solitary event in a monotonous landscape. Rather, it stands at the crossroads of a global financial quake and digital innovation mishap. The saga began with Japan's surprising interest rate hike. This strategic financial move triggered the unwinding of international carry trades, where investors had been exploiting Japan's historically low rates for profitable ventures. One could argue it was like shaking a precarious house of cards built on economic guesswork. Amid this backdrop of international drama, Nvidia found itself wrestling with its own set of challenges. Over the weekend, reports surfaced regarding a newly discovered design flaw in Nvidia's much-anticipated Blackwell AI platform. Never a company to shy away from a bit of controversy, Nvidia did not acknowledge the issue directly. However, industry whispers, serious and somber, suggest that if these reports hold any truth, it would only mean a few months' delay in the start of Blackwell sales. Now, in stock market terms, a few months' delay is more like an eternity in purgatory. Already, Nvidia's stock had been falling, having tumbled more than 15% over the last month. However, Oppenheimer analyst Rick Schaefer threw in a life raft of sorts. In his recent research note, Schaefer noted the substantial demand for Nvidia's current generation Hopper H100 chips, implying that any potential delay in Blackwell sales would essentially be a hiccup rather than a catastrophe. To quote Schaefer directly, Nvidia's competitive position remains sound, and we don't expect any share loss from a minor delay. If one can trust analysts, and let's face it, their job security depends on not leading the masses astray, this points to a horizon still golden for Nvidia. The next quarter earnings would play a key role too. But how? Let's find out. Hello everyone and welcome back to Investocracy.
We're tracking Nvidia shares this morning. NVDA, the ticker symbol up on your screen right there. The shares are moving to the upside today after leading the declines in the Magnificent Seven yesterday, Monday, with those stocks shedding over $650 billion amid a steep global sell-off. The stock's volatile run over the last month here is leaving investors wondering if now is the time to buy. Let's bring in Patrick Moorhead, the founder and CEO of More Insights and Strategy, joining us now here. All right, so Patrick, is now the time to, if you're not already involved in some form or another and have exposure to NVIDIA, is now the time?
Listen, giant sell-offs are always a huge opportunities for investors. When I stand back and when I look at the PE ratio, it's reasonable when you consider the growth rates. Their midterm competitive position hasn't changed from anything. And when I look at short term, there is a little bit of risk here with this potential Blackwell push, which is the follow-on to their H series. But customers can still continue to buy the H series. So even on the short-term risk, I don't see a tremendous amount of downside here.
Besides, the true litmus test lies in Nvidia's upcoming quarterly report, due on August 28th. Any positive comments could ease investor jitters and help the stock reclaim its former glory. While the company's Blackwell platform has incited speculation, the demand for their H100 chips could sufficiently buoy the ship until the storm calms. The key word here is resilience, a distinguishing characteristic for Nvidia, which has managed to thrive even amidst technological setbacks and volatile market conditions. Adding more fuel to this fire of optimism, investor interest surged as Nvidia's shares dropped. This increased activity indicates a strong belief in the company's potential to overcome current challenges. Nvidia's ability to maintain its market position despite regulatory scrutiny and legal controversies demonstrates its robust foundational strategies and innovative edge. As the market eagerly awaits the quarterly report, the focus will be on how Nvidia plans to navigate these hurdles and leverage its strengths for future growth. Investors are hopeful that positive news will reaffirm Nvidia's position as a leading force in the tech industry. While market volatility is almost a cliché in stock market discussions, Nvidia's rebound points to an underlying investor confidence. It's as if the market collectively decided, well, the world might be imploding, but hey, Nvidia's still worth a shot. As the dust settles, strategic long-term investors continue to see Nvidia as a golden opportunity. There's this palpable sense that Nvidia's volatile journey is more of an adventurous ride than a delineating path towards disaster. After all, what's a market without a couple of dramatic entr'actes? So what might be next for Nvidia stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
There are members of our investment committee who are making moves or if you want to use the word dislocation yesterday, to add to positions or establish new ones. Rob Sechin joins us now of New Edge. It's funny, Rob, we had many conversations over these months about not being in NVIDIA. You owned a number of different tech names, but this was the one that you didn't. But now you do. Tell me why.
So, Scott, when we looked at our portfolio, this is a portfolio that specifically benches against the Russell 1000 growth. And if you go back to the peaks, the average stock in the Russell 1000 growth was up 5%. Our average stock was up 15%, and yet the index was up 21%. And all that performance, all that underperformance was due to not owning NVIDIA. So it raises the questions on how you're building portfolios that are supposed to act a certain way within client accounts and make sure that you're not taking that, what we call tracking error or active risk. And so what happened yesterday, after being underweight the stock for a long time, we looked through our portfolio. We saw that a stock like O'Reilly, which is still a high quality business, they've generated attractive returns. They had a lot of defensive characteristics, but they were trading at a very high PE relative to their history, and they were seeing same-store sales start to slow. So we looked at that position to move into a position like Nvidia, and effectively within our portfolios, upgrading quality, capitalizing on a recent valuation reset, reducing our tech underweight, reducing our tracking error and active risk. And given that they're going to have earnings in the next couple weeks, we felt that a half a position made sense. Now, mind you, we didn't do a full position because we still think there's some risk here in the short run, whether it's because of the unwind, whether it's because of this move we've seen in interest rates, whether it's because we have more jobs data coming out that may scare markets. We do think that you could have an opportunity to buy more at lower levels. But message to your investors is when you see volatility, you can't just think about from a macro standpoint what you're going to do. You have to be surgical, you have to be micro, and I would envision that in all our portfolios we run, which is 5 different strategies, you're going to see us making a lot of changes as this volatility, if this volatility persists, in upgrading the quality. I don't think any of us knows right now if this is a welcome cooling or an unwelcome growth scare. If it is the latter, we will have plenty of opportunity. And the key is preparing clients to do things. Let me tell you another thing we did that you might find interesting. A month ago, we were long duration. Never have I seen a move in bonds the way we've seen a move in bonds here, and we've closed that out and are even shortening duration right now because it's become much less attractive. So there, to Rick Reeder's point, to everybody on the committee's point, there is a ton to do, and volatility creates opportunity if you're prepared for it.
I appreciate you, Rob. Thank you for coming on today and talking us through all of this. We'll see you back on the desk.
In the arid desert of stock market fluctuations, Nvidia emerges as a surprising oasis, offering long-term value amidst short-term chaos. Its present state is a testament to investor confidence and a buoyant market interest, showing signs of recovery quicker than anticipated. Nvidia's current dip presents a tempting prospect, making it an appealing candidate for any far-sighted investor. Despite recent bumps, the forward outlook for Nvidia appears promising. Future-focused investors and tech enthusiasts alike view the brief setback in Blackwell's launch as a minor inconvenience rather than a defining debacle. With consistent demand for its Hopper H100 chips serving as a sturdy flotation device, Nvidia is set to weather the storms of financial unpredictability. As it gears up for its approaching quarterly report, investor anticipation bubbles with potential excitement. Nasdaq's day-to-day fluctuates, but the forecast for Nvidia hints at growth and stability over the longer term. As we close this captivating market chapter, the question lingers: what do you make of Nvidia's roller coaster ride? Share your thoughts, insights, or doubts. Because in the whirlwind world of stocks, everyone's got a ticket to ride. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.